Hey, welcome to this TrendForce training. This one is critical. So what are the key levels that cause the biggest moves? Inside this training, Dad breaks down exactly which of our key levels are the most important, the hierarchy, which ones to pay the most attention to, and which ones set off the biggest moves. So get your pen and paper, and we'll see you on the inside.
Yeah, cool. Welcome, everyone. Nice to see so many people, all the enthusiasm. Wow, already almost 30 people watching tonight. That's awesome, man. Hopefully we're all going to learn something. And I want to say, I'm so encouraged, just the way our whole community has embraced this change. I mean, don't underestimate the shift, we made. I spoke about it last week, from retail trading to professional trading. So it is a major, major mind shift. And there's a lot to learn, but eventually it actually becomes pretty easy, just learn to identify the levels. But I'm just so encouraged by the results. A lot of people are just like jump straight in and getting great results. We've never seen that before with our previous kind of, versions 1, 2, 3, and 4. But just seeing the amazing results. And also, I did put that little post on, I think on Saturday or so, that the market has been quite hard. I saw another trader that I follow, professional, just saying how tough it is, because a lot of traders are more swing traders, and it's very difficult swing trading in volatility like this. So we're well positioned, with a 1 minute and 3 minute. But having said that, this whole strategy works fine for swing trading. I mean, Ty said I could talk about it tonight. There may not be time, but how to set up charts if you want to trade on high time frames. It's very easy. It's straightforward. It works. The signals are amazing on high time frames too. So you won't go down that bunny trail. But look, trading has been a little tougher, lots of volatility, but we're well positioned with our TrendForce Pro, with our levels, to find gaps in the market. And so anyway, tonight is all about looking at our key levels. And as I said, I will, hopefully I won't forget, Tal will remind me, I will just drop my notes in the chat straight after I finish. So everything will be there. I've been typed them out neatly this afternoon. And it's just the Word doc. Hopefully you can download it easily, but all the notes will be there because there's quite a lot. I'm going through every level tonight, and I've characterized them kind of in 4 tiers, from most important to least important, but everything counts. Any level could be a key on the day, but I've called it a hierarchy just to go from, the most important, especially the ones we can expect the bigger moves from. So I'll just jump in straight away and let me comment from now on. We are professional traders, mindset shift. Yes, Mark. I like that. So I'm just going to go ahead and share my screen, if that's okay. And I think this is what I want. There we go. You should be, let me just move your amazing faces out the way onto my other screen. Yep, so all these levels, all these things I'm going to talk about tonight, I will drop it in our chat afterwards. So if you get a little bit overwhelmed with a lot of things, don't worry, you can study it in your own time. But again, I keep saying this, eventually it becomes part of your subconscious. I think when I first started trading, you can't see what you can't see. You think you know everything, and then there's a lot more kind of behind the scenes. But then you will learn slowly over time, and eventually you'll look at a chart, you'll recognize the levels immediately, be pretty easy. So the first we're going to look at it. So before I mention these 4 tiers, the key thing is, this is always true. We always talk about in trading that high time frames bully lower time frames. So that tends to be very true of all these levels, because as you've noticed with some of these levels, there's daily, weekly, monthly, and even session. And so monthly will always beat weekly, weekly will always beat daily, and daily will always beat the session, or intraday, as some people call it. So the high time frame ones always carry more weight. Now, also remember, you would have discovered this by now, that there are a lot of levels that we have in our strategy, but most often you will only see a smattering of them. You won't see every level all the time. Some you may not see for a week or two, like monthly levels. Even looking at my 3-minute screen now, there's not a lot here. But even then, wow, you can see exactly how well this works. There's H1 low. We had a bit of a cluster here, H1 low, as well as the prior week POC. And 2 of our moving averages, price rejected that level, dropped down. You can see all the way down to H1 low -1. So that's amazing. That's just how the strategy works. But let's not get too sidetracked. So let's jump in. So the first, we look at 4 different tiers, and I'll look at some examples. But the first one, let me just go to my 1-minute chart. The first one, in fact, I'll look at the charts more for just the early levels, but they would be easier to look at. And so what is most important, if we're going to rank them as a hierarchy, so the first tier, I've called them the volume tier. And so if the volume is huge in trading, we often talk about volume. So in brackets, you'll see this in the notes. Next to volume, I've got institutional order positioning. So volume is where the money is. So volume is where institutions are anchored. It's where their positions are. So volume is where the most trading activity occurs and where institutions are comfortable holding positions, ready to execute orders. I mean, that's what we would want to know if you wanted to trade. And that's the whole philosophy behind TrendForce Pro, is we want to enter trades where the big money is. So where is the volume? Where these large institutions got their orders ready to trigger via algorithms or whatever they use, that's where we want to trade. And so volume is really king in trading. And that's why we've developed a strategy, trade like pros, and find where the volume is. And so number one, and I've got, I think, all the way down to, 15. I've divided all our levels into 15. And some I'll just mention as a group. You'll have the notes, but we'll look at some examples. And so the first number one is our current volume bands, our current session volume bands. So right now, we're now looking at the market open from 11 o'clock in New Zealand. And of course, we should be well familiar with the bands by now. So right now we can see our mid VB here, and here's our oversold band, and here's our lower volume band, LVB. And we can see again, just how price moves quite predictably between these bands. So this is number one. This is the easiest way to interpret price movement, because price is always moving between the bands. So you can see when it becomes, and it's not 100% every single time, but generally when it's oversold, it'll wind its way back up. You can see here, oversold, wound its way back up to the low volume band. There was a test, and then second time broke through up to the mid VB. Of course, the volume is lower at this time of the day. If you went, for example, in the morning session, you'll see far bigger moves, So we can see here, price was oversold, and then from oversold, moved up to the low volume band, tested that for a while, up to the upper volume band, low volume band, didn't get to oversold again, but again, always moving. Look at these beautiful moves. They're often very predictable between our bands. So this is our daily session band, our volume bands for the daily session. So that's pretty easy. All the time they move between the bands, very predictable. So that would be number one. So that we should be most familiar with our current session volume bands. So they also, I think we've explained it quite well. When they're going parallel, you can trade between any bands. But generally when price is above the mid VB, this blue band here, buyers in control, below, sellers are in control. And as I say, we are teaching this in layers. So there's quite a lot of layers. And next week's going to be very important too, what I'm going to be giving training on. And that'll kind of seal just the basic foundation. But price always likes to return to the average, So over here we can see price loves, it rejects, oversold. It tests the low volume band, like I said, breaks through up to the mid VB, That is kind of the average volume right now, and price loves to return there. And so the angle to which they slope tells us a lot too. I think we covered that quite a bit too. So when they're running horizontal, we can fade the market quite comfortably, take trades back to the mid VB. That's called fade in the market, or old language, maybe in a bit of a counter trend. But also we want to be careful too that we don't go against the angle of the bands too. So I'm just giving a little summary. So when the bands are sloping downwards like they are now, we can see here sloping down, then we're below the mid VB, and clearly sellers in control also by the angle of the band. So for example, here's a buy signal. That would be quite dangerous. Now, though we have been oversold, look, our bands are definitely pointing down, showing that sellers are in control. So that's basically our bias, So with these volume bands, this is say just number one of 15. These don't always produce the biggest moves. Some are quite big. If you look back this morning, there's some bigger moves between the bands. They don't produce the biggest moves, but they're the most predictable. So it becomes far easier to read price action when we trade with our volume bands. All right, number two, and I'm going to go to our 3-minute chart. So number two is probably one of the most important, and that is our weekly volume bands. So we cover daily, we put those, the session bands, on a 1 minute chart, but then we also have our weekly volume bands. So right now, here's the 3 minute, and you may not always, oops, sorry, that's the 1 minute. There we go, here's our 3 minute. And these are huge. So the real big moves, the biggest moves tend to come from price interacting, either accepting or rejecting our weekly volume bands. At the moment, I know it's still confusing getting used to this. I've still got the volume bands. I'm on the Dow US 30. These are still set to last Tuesday. We like to lag them a day. Then tonight, before I go to sleep, or first thing tomorrow, I'll click back to weekly. But they're lagging from last week, Tuesday. And these really give us some of the biggest moves. So the weekly volume bands and the monthly volume bands give us the biggest moves. And especially, you often get the bigger moves later on in the week, because if the market is trending, then these bands tend to expand. So we see that obviously with our session volume bands from the open, they'll expand rapidly, then end up going more or less parallel. But often, if the market is trending, these bands tend to expand, and the further they expand, the higher the moves can be. So number two is the weekly volume band. So if we just scroll back and just look at the weekly volume bands, we can see here, for example, let's have a look where we're at. I'll just crunch it up. You can see often price really reaches up. So this candle was at 10 past 3 this morning, 9 minutes past 3. We can see how much this big wick reached up to hit the weekly. Remember, this is from last Tuesday, the mid volume band, the mid VB. So remember, this is where large institutions have their orders. So there would have been sellers over here. And we can see it reached up, and from that mid volume band, the weekly, it came all the way back down, which has just happened now, right down to the lower volume band. I mean, there's a lot of pips in that gap. Now, you wouldn't have entered there, but if we just measure the pips, there was how many pips there? 413, 400, let's call it, 400 pips difference between those two. Now, I know the one thing, I'll just put it in now, it does take quite a bit to get used to trading like this, but once you get it, you'll learn to stay in trades longer. Like a lot of pros would have had a sell orders right up here, and they would have had their take profit. They would have closed the trades on this band. They would have waited a long time for that to close. But again, remember on the session volume bands, prices moving between, the upper volume, low volume bands, the mid VB. The same is happening here. We can see, look at this. We can see this. This was just after midnight last night in New Zealand time. Price broke through the low weekly volume band, kissed it, retested, and then look at this trade from there all the way up. There's 400 pip trades. Now these will happen while you're trading live, sometimes late morning. And this is what I said to Ty when I was investigating and studying this, over the last year or so. I suddenly saw these big moves like at random times of the day, and it was because price was interacting with some of these weekly bands or even the monthly bands. So if we just scroll back, we can see how often these bands come into play. Look here, for example, this was, at night, often not a high volume, around 9:30 on Friday. We can see that this is weekly. Well, where did it touch? It touched the lower volume band way back there. And eventually it's going to wander all the way down. There's 500 pips between those bands. Here again, oversold. And here from oversold, it finds its way all the way back to the lower VB. Oops, let me just measure that. And we can see huge moves. So there's another 300 pips. So the weekly bands produce some of the biggest moves, the 150 to 300 plus moves. So keep your eye on them. So if we just scroll back, you can see continually price is moving. So look here, these are weekly. So price rejects the mid VB. How many pips? 343 pips down there. So you've got to keep your eyes out for these. Here again, look, it rejects the upper volume band, comes all the way down to mid VB. They're all big, they're all big 300 pips moves. Sometimes it doesn't get all the way down. There's our 987. And as you get closer to the start of the week, this is the start of last week with some lag in them. You can see they narrow there, but as they begin to expand, you can see the huge move. So Keep your eye on these weekly bands. That's why they form the basic framework of our 3-minute chart are these bands. If I just turn off the indicator now, let's just see if we can find any monthly bands showing. Often they are, so I've got my drawings off. Let me turn them on. So we can see here now, I've turned on our monthly volume bands. This is number 3. So first was our session on the 1-minute chart, our session volume bands. Second was our weekly volume bands. These are our monthly bands. You can see too, there's often huge moves when price interacts, especially, we'll come to it later, when they, stack with other key levels. But if we just scroll back, you look at these huge moves. I mean, on a 3-minute chart, but you can see when price rejects a monthly band, the monthly mid VB, it comes all the way down to the lower VB. There's 660 pips in that move. So if you scroll back, you'll see huge moves between these bands. So we can see here again, price always moving between these bands. Those are the monthly ones. So I think we know that if I change, it's no different on the NAS. I saved the NAS, the monthly bands too. We can see again, no different. Look, I've just turned it on now. We can see when was this rejection here. It rejected. That's Monday, 16th of March, so Monday this week. Look here, it rejects our lower monthly volume band and finds its way all the way up to, look at that, 250 pips. So all these big moves, that was earlier this week. If you just scroll back, you can see how common it is. Here it rejects the lower VB up to the mid VB, 255 pips all the way down again to the lower VB, 250 pips. You can see these are huge moves, huge moves. So when you turn the indicator on and they overlap, then you'll see sometimes they plot together, they overlap each other. That's when you get the really big moves. So keep an eye on these bands. So that's number 3. Then the other one is not as strong. The next number 4 on our list is just I'll turn the indicator off, and that is looking at our 4-hour pivot. So if we go to a 4-hour chart and we look at the last high. So number 4 is our 4-hour pivot. When was the last 4-hour pivot? Oh, this is, okay, I'm on my Zoom chart. It hasn't plotted it, but it's still sitting right on this high over there. So that's what it should be. So this is our last 4-hour pivot. This is also huge. So it's not as big as the weekly and the monthly, but it still can produce huge moves. So we can see what's happening. This move was triggered, around about 11th of February. So that's been going for 6 weeks. You can see this is still very much in play. And whenever price tests, now this is the 4-hour chart, comes up to the mid VB and drops down, that's 600 pips there. It kisses it again there. Look at these moves. Let me just get my measure going. Mid VB, sometimes it doesn't play ball nicely. Let me try again. So that dropped 600 pips. Look at this one. Up to the mid VB, 4-hour mid VB, drops down. I mean, that just kept dropping, but, we can call that 1,000 pips. And even when it pulls back into the lower volume band, this is on the 4-hour chart, it rejects there. There's a fall of 1,000 pips. Rejects again, chase rejects. And that fell off a cliff there. Bit of the Gulf War, 2,000 pips. So huge moves off this 4-hour one. So again, if you change to a 1-minute chart, you won't always see it. So we'll turn on. I'll go back to a 1-minute chart quickly. And you will see they will be quite fast-paced. So some days in trading, you may not even see them. So for example, if you were trading this evening now on a 1-minute chart, none of those lines are showing. Let's just go back to this morning's volume. I'm not sure if any of them were in play. Here we go, they were. So we can see here, this is our 4-hour, the last pivots. Definite respect there. Price rejected that, and after that signal, I mean, if you entered late, reasons, there was still a big 80 pip fall there. Again, look at this, price moves up. What caused the pullback? Our lower volume band from a 4-hour pivot. But these are huge. So if you track them back, you'll notice just how often price interacts with those key levels. So often there's only one of the lines in play. In this case today was just the low volume band. So that's number 4. But again, these are ones that cause the very big moves. Then next, if we still looking under volume, let's just see what we got in play here tonight. Just looking on a 1 minute chart. Again, sometimes you won't see any of these because of the range of price. They may be out of the time frame. But the next one is this. Let's have a look here. Here we got previous day value area high. So let's just go to the next group. So we are number 5 now, and that is the prior month value area high. Number 6 is the prior week. Sorry, the number 5 is the POC. So the prior month POC, then prior week POC, and number 7, prior day POC. So you'll see all of these in the notes. So it'll be quite easy to work out, but these are often huge. So here we got the prior day. I want to look on the 3-minute chart first. So let's just see if we can pick up any of those levels on the 3-minute chart. Let's just go to the current session. We can see, yes, we got prior week value area low. So that is, you can see again how key that's been for price. There it's been tested, but testing there, a lot of testing there. There we get a rejection of the prior week mid. We'll come to that. But nevertheless, you see, where was it this morning? No, it was just over here that price was testing it. But these are key levels. So right now, we can't even see the prior month POC. We've got the prior month value area low there. That also came a bit into play this morning. But the POC, that's way up here. So where's our prior month POC? That's not there. But these are key things. So we're still looking under volume under tier 1, the prior month, prior week, prior day POC with value area high and low. They're also absolutely key levels. These are the main things that cause, the big moves. So we can see here price broke below value area low, but very often if the market is still trending down, you can see that from the 4-hour chart we just looked at. But if we were in an uptrend and price rejected, the prior month value area low, then often there's a good chance it's going to move up all the way up to the prior week POC or prior month POC. So we are on a downtrend, so it won't always happen. But very often we can see clear moves. So you can see here that there's often a good chance when prices, so here's the example. We can't really see it here. No, we'll come to that later. So that's basically all our key volume levels. I mentioned them again. Number 1 is our current session volume bands. Number 2, our weekly volume bands. Number 3, monthly volume bands. 4 is our H4 pivot, the last high or low on our 4-hour time frame. To a slightly lesser degree than the weekly and monthly, but still important. Then also the next 3, 5, 6, and 7 are the prior month POC, prior week POC, and prior day POC. So these let's just go to the 1-minute chart to see if we can look at the prior day. So we can see now we haven't quite got down. There's the prior day value area low. There's our prior day POC. And we can see, how strong it is. Price tried to move up, couldn't get above the prior day POC. So these are real magnets. The POC at every level are real magnets for price action. And so very often you'll see when you get into this more and more that it's not a good example. Here price has broken straight through the prior day POC, but when there's a break and a retest, very often then price moves all the way to the previous day value area high. So this is currently quite a strong magnet. So we'll just watch this while I'm talking. I would have liked to have seen a nice retest here on the prior day POC, but there's still a good chance that price, for 2 reasons, this is a good magnet, by the way. We've both got our mid VB and the prior day value area high sitting as a bit of a cluster along with the big round number, 46,800. So there's quite a nice cluster. So we're sitting down the prior day mid, which is the key level, our 233. So price obviously deciding what it's going to do there. But we have been oversold. And so would have been a lot of liquidity hanging here. So there's a good chance, there we go, as I'm talking, prices could well make its way up to this next cluster over here. So never say never, but there's a good chance now, especially that we've broken the prior day POC. And so I would like to have seen a retest and also a retest of a low volume band. It broke right through. But let's just see if price makes its way up. How many pips is there? It's roughly another 30 pips to get to that next magnet there, 32 pips. So that could be a trade. That could be a trade right there. Obviously, we're not trading now, I'm talking. But these are the key levels. So those are the main volume levels. So that's where there's a high volume concentration. And that's where, and the key thing is too, is when these are stacked. Let's look at the 3-minute. What have we got on the 3-minute here? So let's see where this 3-minute target is. Sorry, I'm still on the, still on the Dow, on the NAS there. Let's just see, look at this nice open space here. I like this, look at this. On the 3-minute chart, there's a nice bit of open space. It looks like we're testing the prior day mid right now, but this is looking quite good. And we can see here just a bit of training. Look at this H1 low -1. That's why I love, these are called standard deviations. You know, look at that multiple testing. All you see is wicks on something like the H1 low -1. May not be too clear because it's quite small on the zoom, but there's a magnet all the way up to the H1 low. So, I mean, that could really go really high. I'm not saying it's going to go that high, but we've got nice open space up to the prior day VIH, where my mouse is sitting over there, and it could well go higher. So we'll keep an eye on that while we go through the training. So next we're going to move. So those first 7 I've mentioned, again, you'll get the notes straight after this. Those are of volume. So I've divided it into these tiers. That is the volume tier. Those often will cause the very big moves, and especially when you get clusters, Would have liked us if there was more of a cluster down here. There's not much over there. What we got? We got a big round number though over here. So not a strong cluster, but still a little cluster. We'd like to have seen more. But when those volume levels, when you get, the prior month POC, overlapping with the weekly volume band, a lower volume band or mid VB, those things are huge. Those stacks really, really cause the big moves. So it looks like price is moving up nicely. Let's hope it's going to hit that target. Looking very good right now for doing that. Nice clear space. All right, then the next tier. So tier 1 was volume. Now tier 2 is, I've called it liquidity. I mean, it's not my own invention. It's a term that's well used in trading circles. Liquidity, and the way I've got that, you'll see in the notes in brackets, I've got their price magnets. And so I've called them price magnets because price is drawn to these levels before, deciding direction. And so liquidity, the markets are constantly drawn to levels of liquidity. And the reason is because they provide fuel for the next move. All right, so there's always liquidity sitting at these next key levels. So these ones are very easy. There's only 3. And it's simply these 3, number 8. So I've numbered them all the way from 1 to 15. So number 8 is the prior month, high, low, or mid, but especially the highs and the lows. I've just added the mid because I've just noticed from my own testing. But the prior month, high, low, and mid, the prior week, high, low, and mid, and also the prior day, high, low, and mid. We can see right now there's been a bit of action around the prior day mid. But these are massive, for liquidity. So price is drawn to these like magnets. So we can see here, obviously the 233 is a factor, but we can see, look at these candles, bright candles, they rocketed up to the prior day mid. So these are massive. So very often, especially on the highs and lows, they're what they call, stop clusters. There's clusters of stops around those levels. So prior week, prior month, prior day, high, lows, and mids. There's often stop order, clusters of stop orders. Remember I said that markets have memory. So price loves to return to places where it moved before, where you got liquidity. So not all orders are always executed at key levels. So that's why there's stops, there's orders in those places. So again, we don't often see them. If we just have a look now at our 3-minute chart, all those are way up. Let's just see where the first level is. We got our prior week mid. So that's way up there. If we just scroll back to where there's more volume, I mean, the lines aren't extending that far back, so hard to see. I think if we just look at the NAS, I think there was a mid level we were looking at earlier. We can see, look at this. This is why we got these in the strategy. Here's the prior week mid. I mean, I'd never heard of that. I mean, I kind of invented it. I've never heard anyone else talk about them. And if you look at the prior week mid, look at this price action. So it's this very thin dotted line. Look how price respected it. Look at that wick right on it there. We can see right across that always attracts my attention. On the 3-minute chart, no candle closed below the prior week mid. Is that right? Yeah, the prior week mid. Sorry, yeah, prior week mid. Again, here it was tested a bit. But look here. So we had this move up here, and it hit the peak. Where was the peak? Prior week mid. What was the catalyst for this move down? So once it rejected the mid, I mean, how much did it drop? 120 pips. So these levels are huge. Again, I mean, there's a lot of levels in the strategy, but you're not going to see all of them all the time. But when they do appear, they're there for a reason. Almost every level I have, very seldom will it go unrespected by price. So here we got H1 low. Look, price came down, tested H1 low, bolted up again. You can see it testing H1 low over here. Big rejection. Look at that, 4 3-minute candles, and boom, down it goes. Anyway, the point I'm making is that the prior week, prior month, prior day levels are key, plus the mid. So if we just look at, let's just go to when there was a bit more action. I don't know, the lines wouldn't extend it that far back, unfortunately. Had to save memory to do it, so we can't see. We've just got the mid here. Where's our prior day low? That's probably way too far down to look now. Prior day low is way down there. But you can see, price will always, respect these levels. Occasionally, like here, it bolted through. Obviously, there's a big move was triggered, and it didn't really stop at the mid, not as strong as high and low. But always keep your eye out, for those levels. That's where liquidity is again. They are price magnets. So they also make good targets. So they also you find out that you also get your breakout triggers there. So that's exactly what we saw. Look at this on the prior week mid. That's a real, look at that radical drop there, straight down. I mean, price fell off a cliff. And the reason was because there was a prior week level off there. So, I mean, I just find it so exciting trading like this, because when I come to the charts now, I'm looking for these key levels, knowing that there's big money there. They're liquidity magnets, they're price magnets. I mean, for me, it's just made trading so much more exciting. So those are our liquidity or our price magnets. That's the second tier. So I wanted to say a few other things. Yeah, so they define price direction. We can see how this defined price direction. Lots of liquidity there. Boom, off price went, dropped off a cliff. And also institutions, not the massive ones, but a lot of institutions will be following these levels, and they will have their orders ready to pounce in those places. And then I've often said this too, price often moves. I'll do that more next week. Price often moves between the levels, between the mid and the high, the mid and the low. And obviously there's not quite the volume now, but very often, if you're trading at a very high volume time, where's our prior week low? That's going to be way off screen. It's way down here. But often in times of high volume, when the start of a move has been triggered by, say, a prior week, or could be the month, often it will find its way right down, all the way down to the low of that week or the month. So we'll talk more about that next week. But these are our key liquidity levels. Then moving on, the next one is the next tier 3 is I've called volatility. And that gives us our basic daily framework. So, I mean, volatility is basically how fast and how price moves, especially between levels, how price expands between levels. So if the markets are volatile, price is moving quickly between different levels. And so I've just got a couple here we're going to look at. I mean, obviously very familiar. This morning, if you had your eyes open, you would have seen just a very, very good example. So there's 2 examples we're going to look at here. So under volatility, I've just got our H1 opening range. Well, let's look at that first. I've mentioned it already. That's in our 3-minute chart. So this is basically, besides our weekly volume bands, our H1 range makes up a strong part of the framework of our 3-minute chart. And prices constantly moving between, the highs and the lows. I've got the mid, then I've also got some extensions, and we can see why, because here, although the primary rejection here was our prior week mid, we can see it also rejected the H1 low. And when it rejects a level like that, very often it's going to find its way down to H1 low -1. And again, it works in the reverse. So let's just see how far these lines go back. Yep, they go back quite far. They go back through the whole session. And we can see these only would have plotted from 3:30. So that's the open. It takes an hour to plot them. So they would have plotted from this candle onwards. And we can see again, look how price is respecting. This is our H1 low, H1 low. It's not breaking lower there. A lot of respect. Here, price gapped up. This is the high, off the high, gap down to the low. We can see again, look at this respect, the H1 low, massive, a lot of testing, and then a final rejection over here, and down price goes. So, I mean, the H1, it is used by, you don't always find the massive moves, but I mean, here was a good move. I mean, how much was this? This is quite a big move. If we just took it to the H1 low, there was 70 pips there. So that's quite a nice size move. So I think I've said before, hedge funds, pension funds, they use these levels. So they're not the massive ones that are using algorithms, but you've got their traders would be pressing buy and sell based on these levels. So they are massive. There's enough volume for those to move. So on our 3-minute chart, we have the H1 range. And then on the 1-minute chart, we'll be very familiar with our 15-minute range. We'll just have a look over there. So if we just have a look this morning, how significant these levels were. So you can see how price often respects these. So look this morning. So we can see here we can see how price broke above. This is the 15-minute low. We can see there a bit of rejection, big move. But this is the one that interested me that I noticed looking back this morning. We can see price came down and it couldn't break below the M15 support line, the blue line over here, a double test. Price rejects it, and look where it goes, all the way to the M15 high, the resistance line. Of course, the upper BV volume band would have been obviously an attraction, a magnet for that. But you can see price constantly moves between these. Here we can see you can often, at random times in the day, price comes down and retests. So here again, we've got our support line, the lower line of the M15 opening range. Price test, there is the 2584 there, but both of them together, we can see a little bit of a hiccup as price moving down, and often there's a retest. So constantly keep your eyes on that too. So that is volatility. Price often moves, between those bands, and when it does break below, we can see price drops. So it's mainly used by retail traders, but the thing is, so many retail traders use it. It's a very common strategy to just trade off these bands. I mean, it's a bit risky, doesn't always work, but there's enough retail traders that when price breaks below or above, there often can be a move and then huge respect in the day. We can see here a bit of respect over the 15-minute range well after the open, and those lines plot all through the day. We can see a bit of respect there, and this is part of the cluster on the 1-minute chart. We have the 987, we got our M15 support line, and then of course we also have our mid VB. There's a nice our mid VB and our 2584, big cluster there, and then off price drop. So those are our volatility areas. So they're very good for rotation. We call the rotational reversal, like this morning. Very often, well, not often, but from time to time, where was I looking? Where have I got to now? Let's just go back to this morning. Price often just rotates between the two. So it's quite common. You see price will reject and then rotate all the way up to the upper level, the support line of the M15. There again, he rejects it, double test. You can see clearly on this the resistance line of the M15 range, and down it goes. So very often that determines what's happening. It's part of the daily framework. So if I'm on the 1-minute chart, I'm always looking to see where price is relative to the 15-minute opening range, massive for support and resistance, and can also trigger moves. So it didn't happen today. So very often, if price breaks above, this is why people who trade in the strategy today, there wouldn't be much in it. When price broke above, didn't really go much higher here to the open, around the open. Okay, there was a bit of a move, but that was pretty volatile, risky trading. Most of the pips were before. So, I mean, the strategy does work a bit, but not enough for me to be confident to use it. But again, because so many retail traders use it, it does affect price action. So keep your eyes on those bands, those M15 range all day. Then finally, I want to just look at the last little grouping. You can obviously see that I've left out some things, and I've just called those intraday structure or confluence tools. So The opening range was under volatility. H1 was number 11. The M15 opening range is number 12. And then just the last four we're going to look at are session open. So that's not always a big factor, but price can come and visit it. I can't see where it is, hiding here somewhere. It may be way off. Where is the session open? Where is our session open? I should have looked before. I've got it. I can't see it. It's somewhere here. Somewhere hidden amongst everything else. But it's basically, we've got four things there. So number 13 is the session open. So again, these are not, they're not powerful by themselves, but they do obviously affect price action. We can see an example I'm going to come to now. What am I looking at here? The 1 minute US 30. So the London close, whether it's the high or the low, it's not a factor here. I don't think it came into play today. Let's look at the high, the London high. Where was that? Maybe kind of out of play today. That's way up there. So we can see that price get there. Not really. So sometimes, again, I keep saying there are a lot of levels, but some days you won't see them at all. Price won't go near them. So it's not like the screen's going to be cluttered all the time. So 13 is the session open, whatever time it opened, 2:30, that particular level. London high and low, once it closes, that plots. Then also big round numbers. So those can be huge sometimes. So we can see, look at this big round number, 46,700. Look at that. Look at the rejection. Price constantly testing, trying to break below. Couldn't. And basically moved up. And then finally, our camarillas, our pivots, we don't always see them. So where are they hiding on this chart? We can see there's one up here. Sometimes a few will appear. Let's just go back and see. I think they would have replotted by now. Let's just go back to, okay, they didn't really come into play in that session. You wouldn't see them plotting all the way back there anyway. But keep an eye on those. So again, these last ones, I've just called it intraday structure. So it's our session open, the London low and high after the close, big round numbers, and then our camarilla pivots. They just have, again, the little P to show it's a pivot. Doesn't matter whether it's weekly, monthly, daily, they all have a similar effect. So they help us just with intraday direction, so the session direction. So they're also good for pullbacks. Sometimes price pulls back to them, and that can be helpful there. And also short-term targets. I still sometimes use them for targets. I mean, if there's a clear target and there's a pivot just below, sometimes I'll just lower my target slightly, for the pivot. That can be helpful. And what else? I think that's basically it. So they're good. They basically just give confluence. I've put in the notes there, they're confluence tools. They're not the ones that cause the massive moves, but they're great when they overlap with the other key levels, and then they can be a springboard. So they don't really overpower the higher time frame value areas like, the weekly, monthly levels. They won't overpower those, but together when they overlap, they give great confluence. So those are all our levels. So I'll just mention the 16 again. So we started with the current session volume bands. That's number 1. Number 2 were our weekly volume bands. Number 3, monthly volume bands. Number 4 was our 4-hour pivot volume bands, the last big move in the 4-hour. Number 5, the prior month POC. Number 6, prior week POC. Number 7, prior day POC. So those are all our volume levels under tier 1. Our liquidity levels are called in price magnets tier 2. That's just the prior month, prior week, prior day, high and low in the mid. That's 8, 9, and 10. Then I had just our volatility levels. That's just our H1 opening range, number 11, and our M15 opening range, number 12. And finally, I just called it our intraday structure or confluence tools. That's 13 to 15 was our 16, 13 to 16 was our session open, the London high and low close, big round numbers, and our camarillas. So that's basically it. I'm not sure if there are any questions there. I've flown through, and I'm going to drop the notes in as soon as we finish, so you can have a read through and familiarize yourself. So again, I've tried to get the order. That's the whole point, hierarchy. What is the most important? What's likely to have the most influence? Keep your eyes on those first and foremost. Okay, Tar, back to you.
Very cool. Yeah, there are definitely some questions, and I like how you group those with those different titles as well. I had them almost all typed up, but since we're about to get your version, we'll stick with that. So let me just back it up to these questions. We've got some time. With pivots, going way back, Wendy asked about how can you identify which are the most significant pivots on the 4-hour charts? There are heaps of pivots. Yeah, I guess it depends on what instrument you're looking at and how much movement there's been. But Dad, any comments on the pivots?
I'm not sure if I understand the question. How can you identify on the 4-hour chart?
How can you identify which are the most significant pivots? I mean, I guess you've only, correct me, which ones we've actually got on there, 3 and 4, right?
Yes, I've only got R3, R4, S3, S4 because they have the greatest influence on price.
Yeah, so there isn't necessarily, I guess, to answer the question, a huge hierarchy in terms of one pivot over another. That's why
I looked at that for a long time. In terms of the other levels, they are only marginally significant. And so it doesn't matter whether it's daily, monthly, quarterly. They all have a similar effect. And we're only looking for them, as what I said for confluence and overlapping, other key levels. So they're near the bottom. So that's why you can see I've put them, I've put them in very low. You won't probably hardly see this on the video, but I've got them in very light colors purposely. I mean, you can make them brighter if you wish, under the inputs, but because they're not major anymore, I've just got them light and I've just got P to notice there's a pivot there.
Okay, yeah, Wendy's just following up. There are 6 pivots on the gold 4-hour at the moment. So, yeah, I suppose it depends on how much range or how much price has moved or not moved. The more price expands, the wider those are going to get. Yep. So, I guess at the same time, that's also an indication, right, Dad? Like if there is a lot of them close together, you might be looking at a market that hasn't got a lot of expansion. It's stuck in a bit of a range.
Yep. And then you'll expect a rangy day or until it breaks clearly above the cluster of pivots.
Yeah. So, and at the same time, the longer the compression, the more eventually there will be a breakout. So, yeah, let me, hopefully that answers that. Wendy, let's see. There was one more. I think Jeremy was asking at a certain time about what about the dotted red line? That might have been a relevant line that near whatever you were looking at. I mean, the only dotted red line I can see is right now is prime month
VAL. Yep.
Value that might have been, maybe just could see the label at the time.
Okay.
Jono's got a question. Jono, I want to, in regards to just TPs, and I guess trade management is I put an answer in there, but it's a big conversation that, we can have a whole training on, but I'll just read the question and Dad, you can give your thoughts. So,
yeah, I'm looking at it now. I've just got it here. I've got it on my monitor.
Okay, you might as well read it out loud then. Go for it.
Yeah, so he just wants to, he's going through the setup video. Is there maybe a cheat sheet for regular tweaks to the settings?
No, further back. Sorry, earlier question.
Okay.
Do you have any further tips for TPs? I generally put it on the first level on either chart. That price could bounce off, but often price goes further and you could have taken more pips, but equally it could reverse. So
that's what I'm going to cover next week.
Oh, okay. So, there we go. Okay. Full breakdown so next week, Jono.
That is, I'm going to talk next week about auction market theory, which is very much how professionals trade. And that often determines where we set our TP especially. So
very cool.
And that'll help you to whether you go for a smaller or a bigger target.
Very cool.
Because if you're likely to hit a bigger target, you don't want to set your take profit to 50 when there could be 150 pips in a move. Yeah. So that's what I want to spend a whole session going over next Tuesday.
Nice. Okay. Then I think you had his other question there. Just in regards to the updating the chart and the settings, the day and the week, and getting them right through following the videos. But maybe if there's a cheat sheet, maybe you just missed it. I mentioned in there that you put together that Word doc that's in the group chat.
Yeah, there is a doc there that goes over it quite slowly in detail. Yeah, but it is a very common question. I almost feel like we need to do a whole Zoom over it again.
Yeah, we can do another one. I mean, we did those short videos to kind of work through them, and at the same time, working through Dad's typed up doc is probably the most slow and methodical way you're going to get your head around it. But yeah, as long as you just think about the left-hand side and the right-hand side, the left-hand side being the 1 minute and the right being the 3. Honestly, you could swap those around. You could actually have a lot of freedom. But in essence, some stuff is going to have to be drawn on the left and some on the right, purely to just space things out so we don't have everything on the same chart. When it comes to the beginning of a month or week and lagging, that's I think where most confusion is probably coming from. At a certain point, when do you move that anchor and so on? And I think some guys with just the free trading view packages or lower ones aren't able to go back a certain amount of bars. Therefore, on a 1 minute chart, you're not going to get as far back because you're only getting 1 minute per bar. But if you change that to just be able to get further back in time, zooming out to a 5 minute or a 15 minute, whatever it takes just to get to that date, that's going to be okay. It doesn't, if you just can grasp the concept of it, doesn't matter what time frame you're technically looking at on the left or right hand chart when you drop that anchor. It just matters that you can get to the right bar timestamp wise. So I think it'll all sink in. It just takes a little time. Mike is saying, just missed your target on Dow that you called earlier by 2 pips. Okay, well, things are
annoying, eh?
close.
2 pips.
There you go. 2 pips. Who knows? It is, and you'll sometimes see that big round number. You'll often see, I know a lot of guys in the past have tried to trade up those numbers, and they used to execute their trades a couple pips short because of how many people are executing those orders. They started to bring them just a little bit further away because orders weren't getting filled at the level. So you'll sometimes see that, guys, and that's why, anyway, price action, just got to watch.
I know, in fact, it's 1.9 pips we short.
Well, there you go.
Just getting too technical.
A little bit of perfection, but Jordash is saying that'll be game changing. I'm sure you're referring to next week's training.
Yep.
Where's the best way? Yeah, where's the best way to currently access the doc? I'll just bump it in the group chat. It's in there under Dad shared a group. Vickers, can we maybe have a short video for New York Open settings only for both 1 minute and 3 minute? Yeah, we can work on that. I mean. Yeah, we'll put our heads together and figure it out. Steve, can you repost the doc? Yep, I'll bump it. Look, it's in the chat. I think Mike was also asking for it this morning, or didn't know that there was one, and I referenced it. So I'll find it and just bump it. John, yes, that's correct. Moving anchors weekly. Yep, that's what I thought. Setting at the start of the week in the indicator. Cool. Yeah, so guys, you're on the same thing. It's just getting your head around that initial setup. And then once you've done it multiple times, like get on the live analysis Zooms with us as well on early Thursday mornings, or watch them, because Dad's gone through each chart, gold, Nas, Dow, and set those levels. I think the very first one we did 2 weeks ago, at least on the new YouTube channel, has got a very clear breakdown of what that looked like. So we'll do more. That, we're treating those live analysis sessions like reinforcing all of this setup stuff as well. To get us all on the right page. But when you think about it, it's easy to think that, you've been doing this for years, or you've been on version 4 for 6 months. Treating this like a complete new thing will give you all a little bit more patience. Like 2 or 3 weeks in, whatever we are at this point, it's not a lot of time in the grand scheme of things of learning something with this much, what's the word I'm looking for, depth. So we're getting there, but I am impressed. And at the same time, I know a lot of you are scoring way more wins than you are actually putting in the group chat and sending them to Dad or myself. Don't ever feel like you need to hold back putting that in the group chat just because it encourages someone. Just because, you might be winning consistently and someone else might not be. It's also okay to reference the fact that, like, you may be not getting it yet. We're all going to be in different places. But everybody's wins will definitely encourage someone. Because someone needs to know that, okay, so people are getting this, I am going to get this. So we celebrate with everyone no matter where they are on the spectrum, but the more wins, obviously, the better. Jono, I'm getting more pips now than I ever have, so thanks so much. Still early days, but it's starting to work. There you go, guys. That is why we made this shift. Very
early, very early days.
Very early days, guys.
Massive mind shift to trade like this.
Jordash, same. Yep, there you go, guys. So
awesome,
we know that.
So good.
We really do know that, because when you start to see, look at that cluster, even right there on that sell signal, the amount of stacking going on, like price
you've
obviously
got a monthly
rejecting
low volume band. You've got the H1 low, you've got the 987, the 233, and you've also got the prior week POC. That's a massive stack there.
Yep. And would you have taken that buy signal underneath a stack? No.
No, definitely not.
To the left. So, it becomes easier and easier and easier when you start to see this. And then you see that, like, the amount of rejection of that stack and a sell signal breaking under like that. With a wedge as well, and a triangle. There, wedge and triangle on the candle before the signal. That signal was pretty wonderful. So anyway, guys, I love it. Like, you guys are going to get it. Just give yourself some grace and some time, because once you get this, you will never see anything the same again. Because
you can't unsee it. Once you get it, it just becomes so simple.
Very cool. Well, I don't see any more questions. Jeremy worked out what the red dotted line is. There we go. Brilliant.
Yay.
And we're almost on 9 o'clock, but Dad, maybe unshare your screen. We can say goodbye. And and I'll keep us both pinned on here. Oh, there we go. Helps me turn my video. But guys, I'm just so grateful, because we never would have gotten here without obviously Dad deciding to continue to dive deep and research. And at the moment, we're starting to see people reap the results. So I just want to encourage you, stick at it, keep putting in that time, figure out, you know, if you're new as well, you're probably still figuring out what a healthy study schedule looks like. For some of you, you're also maybe just trying to keep your trading schedule, or at the same time, you've got to maybe allocate some extra time for study/learning and really absorbing it all. So make sure you work through the videos. That playlist that I've created is where I add all of these trainings and whatnot. So they're all in order. So if you're ever missing one or can't find one, just save that playlist, favorite that playlist, do whatever you need to do to just know that the videos are going to be in the same place every single week. And then, yeah, I'll have that live event footage up hopefully in the next couple of days as well. But otherwise, that's probably that. Oh, there's more in the chat. Thank you for all your efforts. Oh, Angela, appreciate that. Prepare videos and documents to help us, as well as the live teaching. A lot of work for you guys. Yeah, thank you. Really appreciate that. It is a lot of work, but it's also seriously fulfilling. Like, we just want to see you guys winning. So that's why we made this shift. Dradash, amazing. Guys, thanks so much. Dave, thanks very much. Robin, awesome training. Thanks so much. Kyle, thanks, fellas. Love you, bro. Cool stuff, guys. Well, that's us for tonight. Enjoy the rest of your night. Enjoy the rest of your trading week. We'll see you bright and early on Thursday morning for live analysis. But otherwise, in the meantime, trade safe. We'll see you in the chat. Good night, everyone.